Hey folks, Sean Plummer over at the Annuity Expert. In today's video, we're going to go over the different types of payouts that an annuity can offer you in retirement. All annuities have the feature of annuitization. If you haven't watched our annuitization video, annuitization is basically converting your retirement savings into an irrevocable stream of income. Other ways that you can take income from annuities is utilizing what's called a Guaranteed Lifetime Withdrawal Benefit, otherwise known as an income rider, and both essentially do the same thing, just in different methods. So with annuitization, they have several different types of payouts that you can choose from. They have what's called a period certain, they have a life only, they have a joint survivor, they have a installment refund, a cash refund, and then they have a life only or joint survivor with a period certain. And we're going to go over those different payouts, and then we'll go into the Guaranteed Lifetime Withdrawal Benefit. So if you choose to annuitize, okay, this may happen if you purchase an immediate annuity, own a pension, and decide to take the monthly benefit. Heck, if you won the lottery and you chose the 30-year payout, that's an annuity using a 30-year period certain. So the different types of payouts that are out there that you can choose from is the life only, and life only is the riskiest of payouts, and it pays the highest payout of all annuitization payouts. And basically what it is you convert your savings into an income stream that'll pay you a fixed amount for the rest of your life. But if you die, the insurance company keeps the rest of the money and there's no death benefit. This is the riskiest and the least safe of the annuity payouts, because if you get hit by a bus tomorrow, sorry, your beneficiaries inherit nothing. Where the single life only payout shines is if you're under the age of 59 and a half and you're trying to retire early and you want to avoid the IRS 10% early withdrawal penalty. Get a single life only payout with a SPIA, and then you're able to get that lifetime income for the rest of your life. But if you're gonna go that route, purchase a cheap life insurance policy for the amount that you invested the SPIA in. This way, if you do die prematurely, your beneficiaries will inherit the original investment amount, and everyone's protected. So always get a life insurance policy if you're going to buy a life-only payout on an annuitization. The next annuity payout structure is called the joint and survivor. And joint and survivor is the annuity payout specifically for married couples. And what the annuity is going to do is pay a fixed payment for 2 lives, okay, on one policy. And you can adjust these joint survivor payouts on how much you want the surviving spouse to receive once the first spouse dies. Okay, so for example, if you have 100% joint survivor and you're getting $10,000 a month, you're gonna get $10,000 a month for the rest of your life, and then when you die, your surviving spouse is gonna continue to collect the same $10,000 a month for the rest of their life. You can adjust that payment. You could do a 75% joint survivor payout. What that means is you get that same $10,000 a month until the first spouse dies, and then the second spouse is going to get 75% of that original payment. So in the $10,000 example, $7,500 for the rest of that second spouse's life. The next payout is a period certain. Period certain is basically getting paid over a fixed period of time. Essentially, you're just getting your original money back paid out with a little bit of interest over a fixed period of time. Once the period's up, there's no more payments. If you die within the period certain phase, whatever's left in that period certain will continue to pay to a beneficiary until the period certain is completed. So to give you an example, if you had a 10-year period certain and you're getting paid $10,000 a month, you get $10,000 a month for 10 years. And after 10 years, the payments stop. If you die within that 10-year period, the beneficiary will continue to get that $10,000 a month until that 10-year period is complete, and then no more payments. The next payout structure is the life with period certain. Basically, it's the single life with a guaranteed period in case you die prematurely. So for example, if you got a single life payout with a 10-year period certain, you die in year 3, your beneficiaries will continue to get the same payment from year 3 to year 10, and then after 10 years, it's up. The next payout structure through annuitization is the cash and installment refund. Basically, what that means is it's going to pay you a fixed payment for the rest of your life, and then if you die prematurely, the insurance company is going to pay you the remaining initial investment amount minus all the withdrawals that you've collected in either installments or in a lump sum. So installment refund is paying out over a series of years. and a cash refund is getting paid in a lump sum. Now that we've gone over all those annuitization payouts, let's go on to the Guaranteed Lifetime Withdrawal Benefit. So a Guaranteed Lifetime Withdrawal Benefit, in the industry we call it an income rider. What it is it's an add-on to an annuity contract. And basically it will pay you or you and your spouses for the rest of your lives. If you buy a deferred annuity with a Guaranteed Lifetime Withdrawal Benefit and you're going to get $10,000 a month, to have the same example, you're going to get a $10,000 for the rest of your life, and then whatever's left in the annuity at the time of death will go down to your beneficiaries in a lump sum. If you do the joint life payout, which is an option that you can do, it's the alternative to the joint survivor, but there's no flexibility in the adjustments, so there's no reduction. If you're getting paid $10,000 a month for the rest of your life, when you die, your surviving spouse will have the choice of either collecting the account balance in a lump sum or continuing to receive the same $10,000 a month for the rest of that spouse's life. So if you're looking for more flexibility and you want to have beneficiaries protected and make sure that the insurance company doesn't receive any unused money, go the Guaranteed Lifetime Withdrawal Benefit route. You're going to get, in a lot of cases, more income. You're going to have flexibility, turn it on and off, and there's no reduction in income if you choose the joint life payout. Hope this answered your questions on the different types of annuity payouts. If you have any questions, feel free to visit us at the Annuity Expert. We have calculators there where you can go look at what these monthly payouts are on a real-time basis. And if you enjoyed this video, like and subscribe. We'll catch you on the next video. Hope you have a great day.